Hi, all. Thank you for tuning in to our market update. My name is Julie Busby. I'm the founder of Busby Group. We are a residential real estate group in Chicago at Compass Real Estate. And I have one of our lending partners, Chad Lubben, on the call as well. He and I both were chatting recently, and so many clients are saying, thinking about waiting. I want to sit on the sidelines and see what happens with the marketplace, or just asking us what the heck is going on. Um, and I always have, what I share, which I will share in a little bit. But I wanted to bring in Chad too because he really is a wealth of knowledge of where the marketplace has been, where it's going. We've both been doing this 20 years, so I always love to bring in a lending partner to share insight from his side as well. So Chad, I'll let you go, and then I can chime in on some items as well.
Yeah, so I think we've seen the craziness of 2020, 2021, a good portion of 2022, and people look at things in perspective of what's the nearest thing to them. So, the hottest market I've seen in 20 years, I believe is officially over, but that doesn't mean it's a bad thing. We're just in a normal market. And I think all the shakeup of, hey, you can go work remote if you want to, or, you can move to the south if you don't like the winters, or you can move to the north if you don't like the heat of the summer. Just all that the pandemic caused, and some of that stir up of us all sitting in our houses for a year and a half has subsided, and we're returning to a normal market.
Completely agreed. Completely agreed. That is what I am saying as well. If you look at the numbers, yes, it was a crazy 2021 and 2022. And prices are coming down slightly because rates did go up a little bit. But with that, if you look at the history, we're still at great price points for our sellers compared to 2019 pre-COVID. But also for buyers, I know Chad, you've got some insight there on like this is a good time to buy. It's Q4 especially.
Yeah, I think it's natural this time of year. I even feel it a little bit myself. I'm super disciplined in my job. I'm a national coach for mortgage lenders and realtors. My job is to keep people working and disciplined when they don't want to. That's kind of part of what I do on the side. And it's natural for anybody that's worked really hard for the year to kind of want to ease into the holidays. I just think that's a mistake for buyers right now.
Agreed.
I've talked about this a lot to buyers that I have. The truth is, whether it's fair or not, I don't think anything in real estate is ever fair. The buyers with lower down payments, the 3% down, the 5% down, the FHA buyers, some VA buyers, which are for veterans that served our country, they have been just kind of set aside as you know these last few years, because there were so many cash buyers. There were so many buyers with high down payments. There were so many buyers that sold their property at a massive gain, and they had a ton of money to put down. And the truth is, those first-time home buyers, or those buyers that didn't have a lot to put down, were just put at a competitive disadvantage from the beginning, and they couldn't buy, or they might have gotten into something they didn't want to, or they just simply didn't even have a chance when we went to make an offer. And you knew it, and I knew it when we were putting in the offer, like, hey, we got to do this for our client, because that's what we do, and we always serve our clients. But we knew when we were putting in those offers that it didn't stand a chance of getting accepted. Would you agree?
Agreed. There were definitely times that things were selling well over list price. And honestly, many times my clients, I'm sure, will reiterate this. I would tell them, this is too much. I don't want you to overpay on this. And sometimes they would say, I still want to do it. But yeah, sometimes they went way over list price,
Right.
and removing all sorts of contingencies. It honestly was balancing to be in it was off balance to be an unhealthy marketplace, for more of a buyer beware situation. And now it's becoming a healthier marketplace. Sellers are able to negotiate now, and it's just a better opportunity, a more even playing field in the marketplace. And I know you I mean, with rates went down a little bit in the last week or so, and you've been able to lock some people in some great prices from some of the strategies that you and I are using too.
Yes.
So it's a win-win where buyers are still getting good rates, but and also some negotiation from the seller as well. So it is a win-win.
Yeah. Yeah. I think it's been since at least 17 that I've seen buyers have this much on their side of the negotiation. We see
Right.
some sellers negotiating on price, which they haven't been, right?
Right.
We see
Right.
some credits going out to buy down interest rates, to pay closing costs. I've seen a lot of inspection items and repairs getting made that didn't stand a shot at getting done in the spring,
Agreed.
right?
Agreed.
So,
Yep.
and that's a normal market, right?
Agreed. It's
So
normalizing.
we're
Absolutely.
we're returning to a normal market. So I'll show you in a second, but I actually encourage buyers that did get beat out a lot between end of 19 into end of 22, especially the last 2 or 3 years. If you got beat out on 1, 2, 5, 10, I've had buyers beat out on 15, 20 offers. Now is your time to get a place. Now is your time where your lower down payments are getting accepted. I'm getting people through that qualify for down payment assistance or grants. It's been 4 years, Julie, since I've
I
done
was
a
gonna ask
loan
you.
that has that. And
Yep.
that's half of our pipeline right now. And
Yeah. No, go ahead. Sorry, go ahead.
it's just because sellers weren't accepting these offers before and they are now. So
Right.
we're still seeing competitiveness. I'm still seeing multiple offers. I'm still seeing sellers being able to sell properties where they want it to if it's priced correctly. Is it going to
Agreed.
go to the crazy negotiations that we saw early in the spring? No. So I just think it's a normal market. I think buyers that have the opportunity to buy shouldn't wait to the spring. I'm hearing a
Agreed.
lot of my very well qualified buyers that have the 20, 25, 30, 50% down. Some of them are cash buyers now that are considering maybe using a mortgage or might just pay cash. They're all waiting to the spring,
Yeah.
right?
Yeah.
So
Yeah. Of course.
if you're
Right.
a buyer and you wait till the spring, you're just going to get
You're now competing with those buyers who had the cash. Completely agreed. Yep.
exactly. So when we look at it from an interest rate standpoint, this is mortgage bond trading. You can see a lot of craziness, right? So this was the
From where?
absolute.
What are the years you're looking at? Oh,
This is
September.
the
Okay, this
last
is
quarter.
okay.
So the absolute height of interest rate since 2007 was October 21st, so a little over a month ago. And what
Okay.
you see, so lower on this chart equals higher mortgage rates. This is
Got it.
mortgage bond trading. So interest rates change each and every day, like a stock gets traded on the secondary market and stock prices change all day, every day. So do mortgage bonds. And that's what determines your rate. So the good news is here was Consumer Price Index report that was released about 2.5 weeks ago now. Inflation came out contained, and it's the first time in over a year where the inflation reading actually went down. So
Yes.
mortgage bonds had a great day that day, and we've stayed around that level now for almost a week and a half. So these are about 0.5% off of the interest rates and the heights of mid-October. So we see
Great.
some really good signs out there for buyers to take advantage of now, and some good signs for sellers to be able to sell their properties. You and I have been thinking outside the box and working together to get some incentives from the sellers to buy down interest rates. I had one from a builder, and I'll let you speak on new construction. That was $1,400 in savings per month for my client from the buy down of the interest rate. So what are you seeing kind of on new construction?
Yeah, so new construction, Q4 is always a good time to buy new construction. Developers want to get some of the properties off of their books. And this year especially, they are wanting to get some off of their books. So we are finding more incentives, perhaps thrown in parking or extra upgrades, as well as some negotiation off the price, which we haven't seen negotiation off price in new construction, like you said, in since probably 2017 ish. So it's great time. And I think Q4 is the time to negotiate, because with developers, that's always the time to negotiate with them. And spring market, even when you have a slower marketplace, Chicago always has a spring market, which is February till May. And that means it's just more competitive. And you may not have as much of an opportunity to negotiate. And we don't know exactly where rates will be right now at that point. Right now, they came down a little bit. And with you and I working together and getting some closing cost credits and maybe some different creative loan programs, we're having people lock at rates at where they were back in May when it was still the frenzy. Things were still going over list. And now you're negotiating price and getting the same rate that you could have gotten in May. So anyways, it's a good time for new construction and in general. We have, Chad, I know you know this, but we have so many clients who are selling and buying. That's become our forte. It's a lot of stress. We get that, and we've at Busby Group have been able to make it really seamless. But one thing that's really encouraging now is that we're able to do sometimes a longer closing on their purchase to give them time to sell their home. We're able to negotiate great on their purchase, and then still sell their home, at a good price as well. So we're able to, and maybe sometimes you get a home sale contingency too, which we haven't seen in many years. So there are so many. I just feel like it's an even playing field now, and more opportunity for either direction.
Yeah, and I don't mean to belittle anyone listening to this, but I've been doing this 20 years. I'm a real estate investor. I'm a huge stock market investor. I've owned properties over 20 years. I think of myself as pretty financially savvy. I got a finance degree. And what I've learned over 20 years and over a lot of investments is you're never going to time the market. It's more time in the market, meaning how long you're in it, not timing the market. So maybe you might get one property right, but you're going to get the next one wrong. So I think and you feel free to disagree with me, but I think if you're a first time home buyer, if you're a move up buyer, right, and if you're a seller that needs to sell their property and are going to be fair about the price and not have to overextend it, I think it's a great time for those sellers. And I think it's one of the best times I've seen in at least 5 years for those buyers.
Completely agreed. Super helpful. So, do you have anything else you want to add? I just want to keep this short and simple because there's been so many questions.
No, I just find that you and your group, there's very few realtors that think outside the box like you guys, that work behind the scenes to make this all work. I can think of several transactions we've done just this last quarter where it took myself, you, one of your agents, if it was one of their deals, working together behind the scenes with the realtors. And these are a lot of the conversations going on behind the scenes. We've done some rate buy downs. We've negotiated on price. We've got sellers with low down payments accepted that didn't stand a chance in the spring. And I think experience matters now, and you have that experience.
Yes.
Negotiations are key right now. You have that experience. I think you're just a wonderful advocate for our industry and one of the best negotiators I've ever seen.
Likewise. The dynamic duo over here. So thank you. We appreciate you guys thinking outside the box too. And again, you're always a wealth of knowledge with your coaching background and finance background and doing this 20 years like me. We started so young.
I don't feel that young anymore.
Yes. Well, thank you again, everyone, for tuning in. I'll provide both of our contact information, so feel free to reach out to us if you have questions. And we might do another one of these, maybe the beginning of Q1, and maybe do a Q&A. So do this live so people can chime in and ask questions. So, everyone, Have a good rest of the year, and we'll be in touch.
Happy holidays.
Happy holidays.